Yeah, I'm looking forward to talking to Mark today. Mark, how are you? I'm now going to make you the presenter. Looking forward to having a conversation about what's on every FX trader's mind right now, and that's a vote we'll get around the NYSE close. Hello, Mark.
Hey, Dale, how are you?
Great. Thank you so much for coming into our community today. I know you're a part of a Top Step FX community, and it's great to have like-minded people around you when you're doing this, isn't it?
Yeah, definitely. It's hard enough to do on your own, so you got to find someone in a group and a community to support you. So so happy to be on.
Okay, well, I'd like to take you back to how you got in the business and how it started for you. You know, maybe what you were doing before then, and you know, who was responsible or what event led you into this arena. I
Yeah,
usually say, who do you blame for it? But I'm
yeah.
not going to.
No, for sure. So my passion for markets started when I was in college, and I was taking a international business or something class, and
Where'd you go to school?
American University in DC.
Oh, wow. Great
Yeah,
school. Okay.
and so a currency trader came in and gave a speech, and from the point that he started talking, I was hooked. And so I just kind of delved deeper and deeper into the rabbit hole. I got a grant to do a study on the feasibility of a North American common currency, and then sat for a day with a currency trader while I was working on that project. And it was the day of the bombings on the trains in Madrid, I believe. Like this, we're talking back in 2000,
Right.
2004.
Yeah, yeah.
Yeah,
The
and
age of pre-ISIS.
right, yeah,
Yeah.
and
Okay.
and he had a Bloomberg terminal up, and he was like, okay, you're going to see, dollar Swissy move up to here, and then or move down to here rather, and then bounce back up, and you're going to see this and that, and like he was just spot on. A former Goldman guy, just really really bright, and so after that I stayed in touch with him, and when I was graduating, was fortuitous enough to be coincided with a point where he was looking to expand his desk. So I traded with him for 2 years, and then around the '08 period, got into financial news and spent some time looking at economic data right out of the government reporting. So got a whole sense of how that all worked.
Were you on Goldman's desk for a few years with him, or he had his own company?
No, he
By
had
then?
his own company. Yeah. Yeah.
Okay. You know, I'm also curious before we move on,
Yeah.
what an interesting thesis or grant that you got. I'm curious about your conclusion that you
Yeah.
came up with that study.
Yeah. So, just to set the stage a little bit, this was during the height, when I got this, during the height of euro strength. So the euro was
Right.
looking like a, sort of this
150.
resounding success. Yeah. Up, I think at that point, just below 130. But yeah, I mean, it was, all-time highs at that point. And everyone was thinking, how brilliant it was. And, when I did the report, what you do is look at the economies of Canada and the U.S. and Mexico, and Mexico still is really a developing / emerging economy, and so it just seemed politically infeasible when you have two developed economies, with different sort of standards of living, et cetera, and then one that was doing really still up and coming. So I think you see that a lot now as the European Union has expanded to less developed economies. You're seeing some of those tensions rise.
Or over debt-laden economies. So,
right.
they couldn't have foresaw Greece. People said back then the reason people that were not proponents said it couldn't work with just a monetary union. It had to be a fiscal union to manage it. That is something that we're seeing, you know, the weakness in, you know, Spain and
Right.
Greece and Italy now and France. It seems like the whole thing's blown up. But you know what? Let's get to what everyone cares about. So we, you know, what do you do to either make money or preserve capital on a day like this? I'm interested in, you work with prop traders. What's the insight or advice that you're giving people on what could be a pretty big red event around the NYSE close? Do you stay on the side on days like this and react to the reaction, or is there enough technically for you to have a toe in the water?
Yeah, so you know, personally, what we do here at Top Step FX is, you know, anyone can join our program, go through an evaluation, and then we actually fund them with our trading capital, and have risk parameters around, you know, how they should trade. And those risk parameters are things, Dale, I'm sure you have for yourself, things like a weekly loss limit, sometimes a daily loss limit, you know, those type of things to say, hey, you know, the most important thing you can do is trade for tomorrow. So
Live
personally,
to trade another day.
exactly.
Yeah.
So personally, you know, I'm scarred trading the pound because I was caught in I was caught long the pound in the flash crash in what was that, November 2016, I think. And you know, at the time I had an account, and 2 minutes later I had $16,000 less in my account for no apparent reason. So I'm really scarred by that. Today I will not be trading the pound, particularly, you know, as we see. There's some interesting dynamics going on in the market. You know, like, it seems pretty clear that the market is expecting Prime Minister May to lose the vote this afternoon. And yet, when we look at the pound, and let me bring it up here on my chart, I think,
you know, Mark, it's interesting. Sometimes you have to be scarred to know whether or not you have the will to get off the canvas and do it all again. And, you know, it won't happen again. Yeah. And sometimes we have to have an auto wreck to know how to, you know, avoid accidents. And, you know, I think it's something that everyone gets caught in something. It's what you do with it. You either get in a fetal position or you assess it, and you think about how it happened, and you avoid the same mistake. So I doubt you'll ever make a mistake like that again. Did you have stops in when that happened?
I did, but it didn't matter. The pound went from, I think I was in at 121 or 122, somewhere in that area. And I think the low tick on the chart was like 113, and I was able to get out.
You.
No, I think I got filled at like 115 or 16 or something. But those, you know, those weren't really prices. Like, you know, like the market didn't actually trade there. And so, you know, it was just a very frustrating, painful experience. And fortunately for me, I didn't have, you know, too much size on where, you know, losing 5-6 cents in a couple minutes could, you know, wipe out or bankrupt, you know, my account. So
you ever notice that you have too much on when you're wrong and not enough when you're right?
That's right. That's
it's all in our heads.
Yeah.
So you started with EG, and you know, I think that could actually be a kind of a good way to play this pound. It seems like everyone's pretty sanguine, and you know, the bulls are making a case for 131, but you know, I was looking at possibly looking to buy euro pound around 88.20. I see you trade pretty naked here. No indicators, just looks like pivot points, supply demand areas, or technical levels. What are you using there, Mark?
Yeah, so on these charts, in particular, you know, with what's happening today, you know, with the pound, I don't want to get too too complicated on the charts. I really do want to just see, hey, what are those support and resistance points? So the two green lines that I have here are kind of like what I would consider like an area of consolidation. We're seeing this is a 4-hour or this is a daily chart.
Right.
The 4-hour chart. So we're just seeing the price continue to be, drawn to this area. Excuse me. So that's kind of just like there, and then we obviously have the high that was put in over the past few months, and then excuse me, Dale.
That's okay, buddy.
I am a week into recovering from a small cold, so
Okay.
Sorry.
Better than pneumonia.
That's right. Oh, for sure. So yeah, so we had those highs around 91, and then the lows at down below at 86.71. So yeah, so I would say if you're looking to buy, and I think you mentioned 88.30 or 88.20.
Yeah.
I think that could be a level that is hit. And actually, I kind of agree with you that there is some risk to the pound to both sides. I would kind of view it more as a risk to the upside, and the reason I would think that is, this news that Prime Minister May is going to lose this vote. It seems to be baked into the market, but the pound really hasn't, particularly as the chatter has, sort of increased over the past couple of days. The pound hasn't, sold off at all. It's kind of just treading water. So what that would tell me is, even if she loses, it seems to be the market's paying attention to that margin of victory, or margin of
interesting. Okay.
Yeah. So, and I've read a number of things that suggest that if she loses by anywhere from, zero, well, I guess you can't lose by 1 to 70 votes, let's say, there's a chance that she'll make sort of cosmetic tweaks and then get the bill through on the next time. Kind of like, and what it reminded me of was, when TARP was defeated in the U.S. Congress, how they, the market reacted, they made some minor tweaks and then came back and passed it. So it seems like, if the margin of victory is anywhere where she can kind of, make those minor tweaks and then force people to vote for it, so they get their political win of saying they voted against it and, whatever, gave her more bargaining chips. So that may be a big win for the pound.
Okay.
And if we switch over to the sterling chart here, have just some lines of support underneath, and then this larger descending, lower high, lower high, lower high, all the way, going back months and months, right, since the pound put in its highs early last year. So that would be the area that I would really look for prices to target. I know one of your earlier guests mentioned, getting above 130 he thought would be bullish. I'd actually be a little more cautious on that, and look towards that 130.60 level, as an opportunity to either sell or buy a break up that trend line as we move into tomorrow.
Okay. I've noticed from some of the reactions I've seen from you in my stream on Twitter that you have a pretty, and correct me if I'm wrong, pretty bullish view of the dollar. Am I reading you correctly that that's your macro view, and you look at every dip that the dollar takes as potentially an opportunity to position yourself back on the long side of the dollar?
Yeah, definitely. And I've been that way since mid last year. I gotta say that last week's move in the euro above 115 kind of caused me to re-examine that sentiment. But I came down on the side of still, I believe that Europe is heading for recession, and I don't share the same belief about the United States.
Okay.
So I think, all in all, when there's still this huge demand for dollars out there.
What do you think is behind it? Just denominated debt, dollar denominated debt? Could it be that it's still the petrocurrency, reserve currency? What is the, fundamental behind the demand for dollars that you see?
I think it is the dollar denominated debt. And, for emerging markets.
Okay, there you go. Okay, all right.
And there it's excuse me. It's really this catch-22 because the stronger the dollar gets, the more it actually harms those economies, and the more they need dollars. And then the stronger the dollar gets, the more so it's really this sort of, bad chain reaction that happens. And until those, global equity markets sort of stabilize in emerging markets, I think that would be one of the impetuses behind me sort of switching to a neutral dollar or bearish dollar view, is if those emerging market equities, start to stabilize and bounce.
Okay. How about price structure wise on the Dixie? 96 was a big area, and we keep challenging it. Dollar gave up. It looked like a major breakdown, but we're testing it again. I could make a case for maybe 94-ish, 94 and a half. What would price-wise turn you bearish a dollar based upon the dollar index?
Yeah, so I don't pay a ton of attention to the dollar index.
Okay.
Just to be fair, euro. I use that kind of as a proxy, as it's 65% of what happens in that index. So if I bring up a chart here of the euro, what I really look to see, and one of the charts one of the patterns that it almost scares me how clear this pattern is just looks like a standard head and shoulders here, right? And I thought we were going to break down here last, August. Ended up holding on, coming across, and then thought for sure we broke down early November, and Eurodollar found some support. So what I would, I used to have my levels, for a breakdown sort of alongside these highs right here. And at like 140.
So many traps
Yeah.
for a lot of people, and you don't hear it anymore, do you? I mean, there was such a drumbeat for parity in the euro. I'm not hearing it anymore.
Yeah,
Are you?
I'm not, but I think my target for Eurodollar is down here, and I know these bars aren't super big right now. But right in that
gap.
108 to 109, and that's the gap where the French election.
Yeah.
Yep.
Okay.
And so that's my intermediate term target. I think if it picks up steam, the theory kind of behind the head and shoulders is if it breaks that neckline, then it's going to target a price level equidistant between the top of the head and the neckline. And so that would actually put, if it does break there, that would actually put the target, right at that like 103, 104 level. So it could certainly, gain some momentum. Whether we'll get there, I don't know. Things would probably have to get pretty bad in terms of the European economy, in my view.
Okay.
But I don't rule it out. I think you have and one of the things that kind of helps me solidify my view is actually listening to people like your earlier guest who are a little less are bearish dollars or not bullish. So I think there are a lot of people out there still to jump on the bullish dollar bandwagon, that there's enough price to go.
Do you do anything with the commodity currencies, Mark? You know, we had that big drop in oil and finally got that reaction in the loonie.
Yeah.
So I'd be interested in what your views would be. We had that flash crash in Aussie and the yen on New Year's. Probably gave you goosebumps, reminded you of something.
Yeah.
You have a bias or view on, say, Aussie?
Yeah, so I was actually short Aussie dollar right up at like 72.15 heading into, the weekend.
Yeah.
Because I was thinking I was taking, 20, 30 points of risk right there to the recent highs. And then, one of the things I like to do, Dale, is um, someone once told me, you know, amateur traders try and, buy weakness and sell strength. And what really good traders do is buy strength and sell weakness. And so when I saw, euros, 70 points lower from where it went into the weekend, and Aussie's 15 points lower. And so I do think, we could be at this intermediate term top in Aussie where it's a really good, risk to reward. But I think if I'm jumping on that long dollar train, um, Aussie relatively has been strong, and I'm not sure that's the best way to express that opinion.
Okay, so do you trade any of the outside markets like gold, silver, crude indexes, or strictly FX where you're at?
Yeah, no, I love this move higher in gold. I think is really bullish. So I love that. I'd be looking to, and that's kind of part of this dichotomy of like, being bullish dollar, yet, looking at that move in gold and saying, hey, there's something there, there's something behind it. So
Yeah,
I would
it did it without the dollar.
yeah,
It
and
did it
and
without a weak dollar, really.
yeah, and I don't know your view on this, so maybe you'd share, but when you see two things, that are highly correlated and then they break down, to me that tells me either, gold is going substantially higher or this is some sort of false breakout. And it doesn't seem like a false breakout. So I would look to buy gold maybe, $5-10 lower for a move above 1300.
Okay. How about now taking the time to, tell us what you do at Top Step FX, and are you what I would call a mentor in a trading room to guide your newer or your prop traders through the landmines of FX trading? Is that your role over there at your company?
Yeah, so what we do, like you said, we have proprietary traders that we fund with our capital. And the way we find them is, we just have an open evaluation. The valuation does, cost anywhere from $125 to $275. But in terms of really developing, and gosh, I paid more than that for my Forex education via live account. So it's a simulated account, and what it does is put some risk parameters, kind of like I mentioned earlier. So you have a weekly loss limit, and you have a profit target, and you have a minimum number of trades that you have to do. And then once you kind of meet that profit target without breaking any of those rules, we give you live capital. And we have 100% of the risk, so that, say you were caught in a flash crash, that's all our money. There's no joint capital contribution like some prop firms do, where the first loss is your loss. So it's a really good opportunity. And what I do over here is kind of some of the analysis and market analysis, and just kind of like look at it and talk with folks, tell their stories, find out about how did they get into trading, and just kind of share that in the community, in a sense of, we don't have an online trading room, but it's kind of just via email. and our blog, just sharing those stories of saying, you know, what we're here to do is really help anyone trade better. And so, you know, kind of maximize their own potential and journey and stuff like that. So it's a really good good opportunity for those that are, you know, kind of new and or struggling, who are looking for, you know, hey, what's the right strategy to use in these markets? Or, hey, I have some, you know, behavioral things to work out before I, you know, put my money at risk again. So I'm gonna, you know, trade.
And you guys have a lot of good podcasts. You interview a lot of traders as well, don't you? Kind of like similar to what we're doing right now.
Yeah, for sure. So the podcast is called Limit Up. Dale has been a guest on. We've had, you know, Jack Schwager, Blair Hall, you know, some of the other of the market wizards, Dr. Brett Steenbarger. So a lot of folks you'd recognize the names.
What's the one thing you remember? What's the most important thing you learned from Jack Schwager? Because I've interviewed Jack, I don't know, 3 times or so, and I come away with one important piece of advice from him. What was yours? What did you get from that?
So personally, what I would say is that the trading style that will make you the most money is the trading style that fits with your personality.
Bingo. So he says that a lot. He said, find a trading style that suits your personality. So what if you're a Gemini and schizophrenic? Would you have both trade the 5-minute chart and a monthly chart at the same time?
I don't know. I'd have to interview a successful Gemini schizophrenic.
Anyway, so I really appreciate you coming on, Mark. Anything, the best way for people to get a hold of you would be your Twitter handle?
Yeah, Twitter handle is Mark R. Meadows, or my email is mark@topstepfx.com. So happy to talk markets or shoot you thoughts or interact with you on Twitter. So thanks.
Okay, well, you know, I wish you and all your mentees that pips rained down on you guys in 2019. It was really great having a chance to turn the tables on you and interview you, Mark, and really say hi to Danny for me. And I wish you all the success in the world, my trading warrior brother.
All right. Thanks so much, Dale.
You're very welcome. Okay, everyone, that's a wrap for Turnaround Tuesday. Good hunting the rest of the day. And remember, don't just count your pips, count your blessings. There'll be a lot of action in private member chat around the NYSE close to see what the market reaction is to the parliamentary vote. Remember, don't play roulette and bet on a reaction, react to the reaction. Adios, everyone. You're very welcome, Hami. See you, Tom, Babak, Konstantinos. Adios.